Thanks for watching, everyone. For our latest Artemis Live video interview, I'm delighted to welcome Damian Cooper from PwC. Damian is an experienced audit-focused partner in the insurance team at PWC Bermuda and has a focus on the reinsurance industry, particularly the life sector. Now, as well as focusing on life reinsurers, Damian also leads PwC's capital markets accounting and regulatory advisory practice within Bermuda. And with 20 years of experience at PwC supporting life and general insurance clients across Australia, the UK and Bermuda, Damian also has audited several reinsurers' ILS and third-party capital operations. So welcome, Damian. It's great to speak with you today.
Thanks for having me, Steve. Very pleased to be able to chat with you today.
Great. So we're going to dive into the life reinsurance market and in particular going to focus a little bit on the growing trend of partnerships in life with institutional investors and the use of third-party capital there, on which Bermuda has been leading the way. Now, perhaps to begin, you could give us a brief overview of how the Bermuda life reinsurance market is developing at this time.
Yeah, sure, Steve. So the Bermuda life reinsurance market has been growing at a pretty rapid rate over the past sort of 8 or 9 years. So, and we're talking about an average of 10 new reinsurers being licensed each year over that period. And it's taking the total assets under management to sort of well over the $1 trillion mark here on island. This year alone, the BMA just recently published their licensing statistics, and up to the end of July, they'd licensed a further 7 new life reinsurers in 2024. So we're still seeing the continuation of that trend of new registrations and incorporations coming through. And then even within this sort of relatively short time period, the sort of nature of that life reinsurance market has been evolving. So both new and existing reinsurers have sought to innovate and refine their offerings and what they offer in terms of the nature and geographic location of risk being assumed, sources of capital, so the use of third-party capital, which you referred to earlier, has become an increasing feature of the market, and the structure and relationship between sort of ceding companies and affiliate reinsurance, and then also asset managers supporting the reinsurance industry.
Yeah, it's been a pretty impressive few years, really, in Bermuda for life reinsurance formations and growth. And what do you think's driving the success for Bermuda here? It's attracted a significant amount of new global life reinsurance activity.
Yep. So I think it's a combination of factors, actually. So Bermuda, has a strong track record of supporting, if you like, global sort of capital markets through the P&C reinsurance industry. And it's been able to build on that foundation to create the success in the life reinsurance industry. So, on Ireland, we have a well-established regulator and a sort of regarded regulatory framework that is designed to actually support new entrants as well as existing players. We have a good recognized legal framework that facilitates the incorporation of new companies and executing on contracts. And then there's a broad talent pool of industry professionals focused on innovation, which is where Bermuda made its name in the sort of wider reinsurance context. And then supporting all of that, you have a network of advisors and service providers that are there to assist entities in a cost-effective way as they grow. So the cost of starting up in Bermuda as a jurisdiction are relatively low as well because of the nature of the environment here. So that environment there encourages the innovation, encourages people to have confidence setting up. And actually, the first and second wave of very successful entrance into the market spurs the future growth, right? So it's then building on what we've seen. People are always, happy to be fast followers on the success of others. And that's the trend I think we've really seen over the past five years in particular in Bermuda, is people seeing the success of the early adopters and looking to replicate that structure here.
And it's very impressive, really, how Bermuda's managed to sort of learn from its experience with P&C and capital markets and now bring that across to life and provide a platform that people can get up and running pretty quickly and frictionlessly as well. But when you look at the new life reinsurance startups that are coming through, how common are the partnerships with large asset managers these days? It seems to be a real trend.
Yeah, there's a real mixture actually, and I think that reflects the level of growth and innovation that we've seen. So absolutely, partnerships with asset managers is a key feature of life reinsurers. Um, but what we're starting to see is a number of the larger asset managers already have an established relationship or an established reinsurer that they are partnered up with. And in a number of cases, they're really leveraging that into multiple third-party capital sidecars, and aren't looking necessarily for new relationships per se with new reinsurers. So some of the new startups now are partnering with one or more complementary asset managers, and really looking to use that so that they can ensure they have expertise and access to a variety of assets across the spectrum to support their strategy and to come to market in a slightly different way than some of the others might otherwise be doing.
Mm. Yeah, it does seem that efficiency of capital is really driving the growth of life reinsurance there as well. And moving on to sort of focus in on the third party capital in life reinsurance, it's intriguing that the newest breed of life reinsurers seem to come with a very open mind right from the start to utilizing third party capital. And this is now spreading to the established life reinsurers as well. We've seen some of the longest standing players launching sort of sidecar vehicles. But what do you see as the key drivers for third party capital use in the life space?
Yeah, so I guess on the, if you like, the demand side from the life reinsurers, it's worth noting that obviously reinsurers are fairly restricted. That there's a real limit on a regulatory capital perspective on their ability to use debt financing. So they are relatively dependent on equity. So third party capital has really been seen as an attractive way to grow, given its relative cost and flexibility as a tool to fund that growth. And given just the size of where these life reinsurers are going, there is a constant need or a fairly steady need to attain new capital to be able to fund that growth. For the established reinsurers, the use of third-party capital and those sidecars also gives them an opportunity to generate sort of management fee income, right? So to create another revenue source for them as part of their wider sort of return to their primary equity holders. And then also, depending on the source of the third-party capital, it can be used to ensure you get a good long-term alignment of interest between a seeding company or an asset manager, and creating that sort of more symbiotic relationship on the reinsurance side. And then
Mm.
on the supply side, the existing success of those third-party capital vehicles is generating its own appetite for people looking at an effective way to essentially invest into the life reinsurance market, and to be able to partner up or access the successful management teams as they were and their expertise in underwriting and asset management.
Mm. I guess it's no surprise really that investors are attracted to this. It's a great sort of alternative asset class for them that's really expanded in recent years. And structurally, these tend to be sidecar-like in their form of partnership. They're very aligned structures. But how has Bermuda responded to this demand, and why do you think it's been so successful in capturing so much of it?
Yeah, I mean, again, I think this links back to Bermuda's track record of innovation, and the support that it gets from the legal and regulatory regime here. So, if you look at the BMA and what they did, so we've had the development of the segregated accounts companies and the incorporated segregated accounts companies sort of acts and regulations back in 2020, and so that created a good platform for people to build on. And then the BMA has also been very clear in terms of their expectations of how a sidecar should be managed, what governance needs to be in place, what the structure is there. And that gives new entrants confidence when they're going into, when they're trying to market to investors or potential investors as to what infrastructure should look like. And then from a cost perspective, where sidecars has been a relatively sort of a sort of cheaper means to replicate new vehicles, the existing reinsurance ecosystem of Bermuda had a good track record in the P&C space of operating sidecars, and they've been able to pivot their offerings to also support the formation of these structures and to help keep some of those cost barriers down. And that's, I think, really a good primary source of where we're seeing this growth.
Mm. It's been very impressive, really, how Bermuda has adapted the structures that have worked in one sector of insurance to work across a different sector like life. And I think you're right that the responsiveness of the BMA to regulation and making sure that the regulation is constantly kept up to date and adapted, I think, has been very positive for attracting investors as well. Are you hearing the investors being very keen on this segment? Do you think it's an area that could grow?
I think it is an area that's going to continue to grow. As you mentioned earlier, Steve, I think that it's seen as an attractive asset class. It's good diversification in terms of alternative assets that's there. There's still a real shortage of capital in the global life insurance market, so there's plenty of opportunity still for people to tap. I think what we're potentially going to see, Bermuda and the industry has been, fairly heavily focused on the North American market. My expectation in future years, we're going to start to see an increasing geographic diversification as sort of more regulators across the globe get more comfortable with the Bermuda structure and how it can support its domestic industry. And I think that will continue to be a driver for additional third-party vehicles coming into Bermuda.
I think that would be very exciting to see this broadening out to global life platforms looking to use Bermuda to house third-party capital structures. But do you foresee any new types of structures perhaps being utilised in future, or do you think there could be a desire to also leverage third-party capital for hedging peak risks in the life space as well?
I would say never, because all we've seen is continuous innovation. I think there's still a fair bit to run in terms of the existing structures, in terms of what are here, and people really sort of utilizing the ISAC regime, so the incorporated segregated accounts companies. I think that has more run to go before people maybe get into the next wave of innovation. But yeah, it wouldn't surprise me for people to be continuously looking at ways to solve problems that are out there, solve ways to make it attractive for capital to get into the insurance ecosystem. And I would expect it to come through Bermuda.
That's great to hear. Thank you, Damien. I really appreciate you sharing your insights into Bermuda's life reinsurance market and your work at PWC in that growing sector. Thanks for your time today.
No problem. Great speaking to you.